My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, you know me. I'm just trying to make you a little money. My job is not just to entertain, educate, put it in perspective. Call me 1-800-743-CNBC. Tweet me, Jim Cramer. I've got a good sign today. The beaten-down tech stocks rallied hard at one point after a lot of time lost in the wilderness. While the recession-proof stocks, well, they finally got clubbed. And you can see it in the averages with rebound in the afternoon before pulling back again near the close. Dow, home of many defensive stocks, finishing off 478 points. S&P declining 0.75%. But the NASDAQ, where tech lives, losing only 0.18%, although at one point in the afternoon we had a wicked rally going before faltering into the bell. I like the NASDAQ rally, even if it petered out toward the end of the session. It came a little too early, which left time for sellers to ring the register. That's when you have to start these things a little later. Yeah, but we got a trade war going with Canada. Here's what happened. They announced a 25% tariff on electricity in our country earlier today. Immediately, President Trump announced some hard retaliation, doubling the tariffs on aluminum and steel. Take that, Canada. The steel side can be dealt with. Aluminum, I don't know. More on that later, but it's bad news. Canadians produce a huge percentage of that stuff for our airline makers, for trucks, for cars. A 50% tariff would be very inflationary and could destroy the profits of the automakers. Then at 1:30 p.m., the Canadians suspended their electricity surcharge. At the same time, Ukraine said it was willing to have a 30-day truce. Now, if you take a look at what happened here, all of a sudden, boom, the market flew up like a spring-loaded cannon. It's like this. Everyone was just thinking this thing's going down here, okay? But no, it went back. Opportunistic investors did take profits right here. But as you can see, we had a nice rally. At one point, this is up 1%. That was super. Who thought that could happen? Of course, there's no predicting that President Trump will roll back the extra steel and aluminum tariffs. Sounds like he's considering it. The uncertainty worried people, and many, many people were so happy to rid themselves of stocks like Nvidia or Apple. The latter now engaged in a real hideous rollover, even as Nvidia was able to bounce before a disappointing close. But you can see, just for a second, when the Canadians got constructive, that this market truly does want to go higher. When the turn came, it came to the technology stocks, not the safety stocks, because they're the most beaten down. Consider, let's just use this. This is almost $1 trillion company, Broadcom. The semiconductor company, it's on the verge of being right there. And like, Mag 8, whatever you want to call it, reported an amazing quarter just last Thursday. Yet its stock had barely gotten any credit. Came back hard today, rallied as much as 10 points, and then giving back 5. But that's still a very good sign. Of course, no matter what, this market's about tariffs. Canada's suspension of its electricity tariff, that changed everything for the better. That's what made things work in the afternoon. So let's talk about stock prices in the White House. Now, this weekend, the president said he's not focused on the stock market. Maybe if you're in power, you're not up for re-election, the stock market can be ignored. That's just one problem. This is what the president's forgetting. The stock market serves a dual role. Yes, it makes rich people richer, no doubt, at least when it's going up. But when it goes down, it can also be a signal that things aren't well in the economy, that business could be getting tougher, and that layoffs could be on the table. Now, big picture, I mostly agree with the president's attitude toward trade, even if I disagree with the details and certainly don't like the angry way he's handling it. For years, many countries have feasted off our nation's economy. It's been a raw deal for a lot of towns across our country. As factories shutter, people get thrown out of work. President Trump ran on fixing that, among other issues. One of the best examples is what happened in aluminum in our country. We used to have a lot of smelters here, but roughly half of our aluminum is now imported. The vast majority come from Canada. We've been closing smelters for years in this country. Canada's been making up a lot of that at closed capacity. But Canada does rip us off on so many different things. When it comes to international trade, nobody's hands are clean. It's just that the White House hasn't bothered to explain it. That's why it feels like Trump's beating up on the Canadians for doing nothing other than supplying us with cheap aluminum that doesn't pollute our communities. Still, if the White House bothered to explain, rather than just being angry, I think most people would understand why the president's going after Canada. Of course, the details matter, too. A 50% tariff on Canadian aluminum doesn't work because there's no new source to replace it. Wherever we get aluminum, it's going to be a lot more expensive. Raising the price of cars and trucks dramatically, really hurting GM's profits, stinging Ford's, too. I don't think it's a mistake to say that the auto companies are in real trouble with a 50% tariff on Canadian steel and aluminum. You certainly can't own their stocks. Now, let's talk about what's happening in the real world because of the president's tumultuous approach to trade. These tariffs are beginning to scare people. Regular people, you, me. And that's what the stock market's been saying before the Canadians blinked. We momentarily avoided a real trade war. We're still seeing a pronounced decline in small business optimism. It's a cliche. Small business, backbone of the economy. Big business is always trying to trim costs. Small business hires. We're starting to see large shortfalls in many different industries. Delta, great airline, but it's going to miss the numbers big. Same with American. We got a real ugly read about the state of telecommunications today from Verizon. Stock fell 6.5%, 3 points. Wow. We're hearing disconcerting things from retail. Dick's Sporting Goods, terrific company, reported excellent numbers, but its CEO, Lauren Hobart, gave a very downbeat forecast. Why? Well, here's what she had to say. We are not seeing a weaker consumer now. We're coming off fantastic Q4. Our guidance reflects that there's so much uncertainty in the world today in geopolitical environment and macroeconomic environment. We are just being appropriately cautious, end quote. We're talking about sports. Then consider the case of Kohl's, a former jewel of a chain that's fallen on hard times, cutting its dividend today from 50 cents to 12.5 cents. Not good. Kohl's is still making some money, but they're forecasting a huge reduction in earnings, 10 to 60 cents versus $1.24 that the analysts were expecting. More important, they see same-store sales down 4 to 6%, when the analysts were expecting only to be down 1%. Ouch, that's very bad. Now, we're not a manufacturing economy. We're a service economy. That's why it stings when you see these retailers, telcos, and airlines linking the negativity of their customers to political actions emanating, yes, from the White House. I don't want to be a complainer. I like to be constructive. We want more good factory jobs to replace the ones that have been lost over the years. The president's been terrific at getting commitments from foreign companies to build factories here. But modern-day factories, they go into them. They don't employ a lot of people. The issue is that, again, we're service. Most of our business is service. And that economy is starting to roll over because consumer confidence is declining as people worry about impact of these tariffs. They don't understand them. Sure, we have plenty of room for layoffs, so to speak, because we have very low unemployment. But the stock market's saying the tariffs will be inflationary, and the White House hasn't explained to the American people why it's worth it. We also have plenty of room to reverse the mood, though, to make people less worried, to stop the decline of retail, which is a heck of a lot bigger than manufacturing. We can stop the increase in price of cars and homes. We can lower interest rates and oil prices. All good. But the stock market is beginning to say to President Trump, look, it's just not worth it. Even if you want to bring back jobs to America, manufacturing jobs, there's a way to do this without causing a collapse in consumer confidence in the service economy. Bottom line, right now the stock market's saying that President Trump needs to change course on how he tries to implement the tariffs. It's screaming that we have the wrong approach, and the president should not ignore that scream, because that's how you end up in a recession. Let's take calls. Let's go to Robert in New York. Robert.
Hey, Jim. First of all, I want to thank you on warning us about this downturn weeks ago. You came on the television and said, the tariffs come in, we're going to have problems, okay?
Thank you. Yeah, I mean, I didn't want it. I didn't want it. But, yes, thank you for recognizing I did that.
You saved us money, Jim, and you also said clarity on these tariffs. And tonight, Peter Navarro was on overtime tonight and gave us a little clarity. But what Donald Trump should do?
Well, I've been talking to Peter. You know, I want Peter to just be a little more. Look, I've known Peter for 50 years, and there's a way to be able to talk about this without anger, without rancor, with a smile.
Exactly.
Witness the 8 years of Ronald Reagan, where he accomplished a lot of things with Democrats because he had a congenial attitude. Attitude matters.
President Trump should create the Department of Stock Efficiency, DOS, and he should put you in charge of it.
I'll take
and
the
watch
job.
The market take off.
The job.
You get a dose of
the great thing is I don't sleep, so I do that job in the daytime, and then I do this job in the nighttime. What stock? What stock we talking about?
Okay, Jim, this next stock has a 32% upside potential based on the analyst average price target of 145. There's been some good insider buying, but I'm a little bit worried because now that the tariffs are in place, I think the home builders could be affected. But I do believe that this company is a very strong company, Toll Brothers.
Okay, so listen to me, and listen good. It's Doug Yearley, and you know Doug, he's the bomb. And what I really care about here is they raised the dividend. And this is the big fly in the ointment. If President Trump goes after the lumber industry in Canada, then they have to raise the price of homes. You got to hope that the president does not go after lumber, even though that's an area where you could easily take down the Canadians. That would make me want to sell Toll. I otherwise want to buy it. I want to go to Howard in my home state of Pennsylvania. Howard.
Jim, I've been a long-time investor in Starbucks, and their new CEO seems to be making the right moves. However, the stock's down about 13% from its highs this year. Since coffee appears to be a discretionary item, and considering Starbucks' second largest investment is in China, and the potential tariff problems between the U.S. and China. Should Starbucks be held, sold, or bought in today?
Oh, no, you want to own Starbucks. Brian Nichols, terrific. The stock was up. It shot up to 115. That was a big move. It was a parabolic move. It's coming back down. It's more controlled. I think Brian's going to do terrifically. I'm getting my coffee in 4 minutes. I don't know about you. I think he's instituting the right policies. I think he really knows what he's doing. All right, listen to me, guys. Right now, the market is trying to tell President Trump that he shouldn't be so rancorous and angry. Just try to get the job done sotto voce, under the, just fly lower, please. And if he keeps ignoring that message, we could end up a hell of a lot lower than where we are with stocks and with the economy. On Mad Money tonight, could Agnico Eagle be a golden opportunity for growth in this market turmoil? I'm getting the latest from the miners' top press. They know what they're doing. And as tariffs continue to impact the tape, I'm going to be turning to technicals to get a better read. And later, I'm revealing what I think could be a winner in the AI space. And believe me, there are some things that could be winners in the AI space. Don't give up generative AI. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.